Alright everyone, let's do a quick sound check here. Let me know if you can hear me and if you can see my chart. Morning everyone. There's a chat box there. Alright Dave, thank you. Alright, great. Let me take a look here. So how's everybody doing today? Miguel, Mark, Larry, Jeff, James, John 2, Frank, Peter, Phil. Hopefully everyone is doing well. There's a news report here. So let me begin here. We'll spend the next hour or so as more people join into the room. But we're going to spend the next hour learning about the markets, giving you my opinion on where we're going for the year, maybe how to handle the year. I'll show you the Atlas line. I'll show you a couple of days of the Atlas line, answer your questions. Just make it a good, informative Friday morning to get you going, learn and teach you a little bit of what I have to bring to the table. I do have a new group mentorship class starting next week, February 11th. If anyone is interested in joining, I can send you the information, pricing, what's learned, what we do week by week. Everything's included. It's an all-inclusive package. So if you're interested, please let me know or email me or call me. I can give you all the details. Every morning, I look at whether or not there's news in the market. And you can do this a number of ways, right? You can look at the Bloomberg economic calendar, which I've done for a very long time, right? If you look here, there's an 8:30 employment situation, and this is the result here of that employment candle. So I'll talk a little bit about news as well, and you can see it was a very large candle. This looks like 20 points or so. So in my opinion, I think it's very difficult to trade under those conditions. Okay, right as a news event comes out, you jump in long or short, and it's just a big chaotic mess. So I prefer to stay out of that. I also offer some free tools for everyone if you want to download them. Maybe you've seen them already. If you visit the DayTradeToWin website, there's a section here called Software and Free Downloads. And in this free download section, there are a couple of tools that I have available. There's a news indicator for NinjaTrader 7. So if you want your own indicator, which plots the news on the chart, looks something like this here. Right? So it plots the news right on the chart. You can download that for free. There's also an online news calendar, which gives you exactly what's happening at any point in time here. And there's also a few other things, for example, a bar timer. So if you're looking for a bar timer, which I think is very important, I don't have it here right now. I'm going to add it in just a moment. When you know when a candle closes and when a candle opens, a bar timer, in my opinion, is very important to have. You should always know when a new candle opens or closes in order to prepare yourself. There's also a tick counter for TradeStation 9, which I noticed that they don't offer a countdown timer when you're using tick charts. One of the methods that I use uses a tick chart for scalping, and I have to use a tick counter to know when a new candle opens and closes. So I have one here available for you for free. That is maybe 2 or 3 seconds off or more. The results are going to be very different because your candle is going to close at a different price than everyone else's. So this Karen's time sync allows you to just sync up your computer to make sure that your computer clock is on par with the rest of the world. So those are the free tools that I offer here on DayTradeToWin. Videos, trading videos here, and you could look at the blog as well. So there's a lot of information here on the DayTradeToWin website. Okay. So let's take a look at what's going on here with the E-mini S&P using the Atlas line, why we're doing what we're doing, as well as giving you a good interpretation of how to manage any type of trade. So the Atlas line provides a long or short signal based off of price action. Instead of looking at two moving averages to cross or MACD, so the first thing I want to do is I want to look at how price is trading either above or below the Atlas line. Okay, so the Atlas line looks something like this here, and the goal is to take long trades when price is above and short trades when price is below. So there's a definitive reason for a long or a short trade. Yes, Mike, absolutely. If the ATR begins to get smaller or larger, we have to know that. So yes, the ATR is adjusted as you move forward in time. Okay, and I'll show you how that's done. All right. The reason for this long trade is very simple. It's based off of price action. It's two consecutive closes that are plotting either above or below what we have here, the Atlas line. So everyone who has the Atlas line, some of you are students, some of you are looking at this for the first time, this entry 1777.75 is what everyone should have. When you go long at 1777.75, what do you do with this trade? What happens if the trade goes against you? Or how do you manage the trade? What's the profit? How do you trail a stop? Right? So the idea here is to look at price and how it revolves around the Atlas line. I'm using two consecutive closes that plot either above or below the Atlas line. So it's a very direct method to tell me whether or not we have a trade. Now, after you go long here at 1777.75, or this pullback trade to go long, after you have that proof of two closes above or below, we do have to manage this trade, because not every trade obviously is going to be a winning trade. But I want to definitely pick and choose first the trades that make the most amount of sense, and I also want to manage this with the smallest stop. So there's three stops that I use when it comes to trading the Atlas line, and probably this goes along the board of all the methods that I use. I have either a catastrophic stop, some type of time element, a time-based stop I call it, or some type of proof that I should no longer be going long or short in the same direction. So there's three stops in total, whichever happens first, which will allow me to get out of the trade. So I try to be very objective, meaning if there's a catastrophic stop, if there's a proof, or if there's a trade that's taking forever, an hour, 2 hours, it should not be the reason to still be long or short in this trade. If I'm going long for a specific reason, I want to see an immediate result to the long side. So if you're looking at 1777.75, first let's take a look at what the profit target should be. Well, I already know, based off the current conditions, when this occurred here, that the target or the current conditions happens to be 3 points. And I'm using the ATR, the average true range, with a value of 4 that tell me that the last 4 candles averaged out gave me a very specific market condition. I can't expect 10 points, I can't expect 5 points, but I can expect anywhere up to 3 points as far as what the market can give me. So the entry at 1777.75, the exact profit target before any type of trailing stop begins or anything along those lines, I want to see the market move to 1780 based off the current conditions. You can get in, Larry, at market or limit. I like limit orders, but you can get in at market or limit. All right, so either or, market or limit, Larry. Okay, so look at where the price went to and stopped. the market hit exactly what the current conditions told me, what they recommend, what they moved to. You're welcome, Frank, Larry. And it stopped. So I had a very direct target, which allowed me to get in and get out, knowing in advance really what the expectation was. Now I want to make sure that everybody can hear me okay. Frank, can you still hear me okay? Okay, good to go. Okay, thanks guys. So how do we manage this trade? Look at the current conditions and look at the target, and that's what we take. Okay, so let me see here. I'm going to remove here the Atlas line, put it back in. If you see this ATR beginning to go smaller and smaller and smaller and smaller, it usually means that the price is getting tighter and tighter and tighter. Okay, so when in that kind of a situation, my recommendation is to always be more conservative. I'm no longer looking at keeping 3 points or 2 3/4 points. I'm going to really focus on whatever the current conditions are. This is my target. Now, besides the double bar long and double bar short trades here, let me show you the back end of the Atlas line here. We also have what's called the pullback and strength trades here, which is just basically showing me that there's strength or there's some type of pulling back feature in the market. So if there's a pullback, I want to recognize what a pullback is, and I want to take a long or short trade based on the market pulling back. So it becomes an issue of, is the price going to continue higher and higher and higher, or is the price going to reverse? And each of those instances, if the market does continue like a trending market up and up and up, then great. I'm going to go long. I'm going to continue to go long at every instance. But if it crosses and closes on the opposite side of the Atlas line, then at that point, the best thing to do is to either get out of a trade. If you're in a trade, get out of a trade, or not looking for any more long trades, but now just looking for short trades. So the way a lot of traders use the Atlas line is also different, because even though it provides direct entries, you could use it for scalping, you can use it for confirmation, for other methods that you may have. There's a variety of ways that you can use the Atlas line. Okay? All right, anyone have any questions so far? All right, I'm going to switch gears here a little bit. I'm going to get off the Atlas line for a little bit here. I'm going to show you guys about trailing stops, because this is a question I receive a lot on how do you trail a stop. And to me, I think it's very important to know whether or not we should continue to go long or short, and if it's going to work, let's at least have a chance to see this go for a larger profit. So the first thing I'm going to do here is make up a number here and say, let's say as an example that you have an entry to go long at 1770. So if you go long here at 1770, the idea is to see the market go up and up and up. But sometimes the market doesn't go up and up, and I have to know that as well. But if I wanted to trail a stop, you can't do it with one contract. The way that I do it is I like to use multiple number of contracts. So I like to use at least 2 contracts, or 4, 6, 8. So you enter into the market here at 2 contracts at 1770, just as an example. So the first thing I do is say, okay, I'm long. What can I expect out of the market? Well, I look at the ATR, and let's say, just for demonstration purposes, it's 2 points on the ATR. So I have a very precise target of 2 points. As soon as the market makes 2 points here, or I should say 1 times the ATR, half the position. So as soon as the market makes 1 times the ATR here, you're going to exit half of your position. So you're entering at 1770 as an example. It reaches 1772, and at 1772, half of the position, you're out with half of your position, okay? So far, does anyone have any questions? Now, I have remaining 1 contract. I have 1 contract remaining. And this 1 contract is the one that I want to see it move and continue higher and higher or lower and lower. Okay? So as soon as I see this continue higher and higher, I utilize my stop, which is down here, and I bring the stop to exactly 2 points in the opposite direction. The stop on the remainder of the trailing position is not at entry where most traders want to put it. They usually want to put the stop right at entry. But I'm not. I'm going to place the stop equal to the target that I just made. So if I made a target of 2 points, I'm placing the stop on that remainder half of the position two points in the opposite direction. So I made 2 points. If it happens to come down all the way back down 2 points, at that instance, I know that I should no longer be in the trade long, but I've also made a decision not to make any money or not lose any money. And so that's the goal. The goal is once you make 1 times the ATR, you're playing with the house's money. The original stop, Dave, when you first enter, and this is not just the Atlas line, this is whether it be the blueprint or the roadmap or any of the methods that I teach, I initially have to have a stop that's 2 times the ATR up to 5 points. And I call that the catastrophic stop. So as soon as I enter into the trade with 2 contracts, I have a stop. It's called the catastrophic stop because I need to have something in place if there's some type of disaster in the world or news that happens. A catastrophic stop that I use as soon as I enter into a trade. But once you make 1 times the ATR or the time-based stop where you're waiting a certain amount of time to make the profit or proof, those stops are much smaller. And those are the ones that usually get you out if the target's not made. But you have to have something that's large enough to keep you in the trade. You're welcome, Dave. So when you first enter, your stop is down here. It makes 1 times the stop up. And when you move the stop up, now it really becomes a break-even trade. If the market continues higher, fantastic. If it comes all the way down, then you're out of the trade. Now, one thing about the current market conditions, which I think a lot of traders don't realize, is that if I already know that the market can move 2 points, from this position, either up or down, because that's what the ATR is, the likelihood of it possibly coming down and stopping you out prematurely is a problem. You want this to continue higher and higher and run. But if you have this stop really tight because you don't want to lose any money, the market needs to breathe. I already know that it could move up or down 2 points. Right? I already know that it could do this. I want to keep my stop 2 points in the opposite direction. And now what if it moves 2 times the ATR? I'm going to bring up my stop. If it moves 3 times the ATR, I'm going to bring up the stop. If it moves 4 times the ATR, I'm going to bring up my stop. That way, I'm always 2 times the ATR as far as a buffer zone. Okay? So that's how I trail a stop. Hopefully, you can apply this method to your type of trading, where the market, as soon as it starts to move in your direction, don't make it too tight. Definitely protect yourself. Don't make it a losing trade. Don't make it a losing trade, okay? At least make it a completely zero out trade. Now, the other thing that I teach is the characteristics of a market. If you notice how markets work, markets go up and up and up, and then they go down and down, and then they go up and up. But one thing the market never likes to do, it doesn't like to trade in uncharted territory, what I call uncharted territory. If you're ever looking at new highs or new lows, you really don't know where the market is going, and that's always a problem. So I want everyone to think about this here for a moment. Really, any market. Markets love to trade where they have already been. If you know that the market is going up and up and up, and it reaches a certain point here, and it starts to come down, this is a very good opportunity. Or here, what I'm saying is that the markets love to trade where they have already been. So I know that price has already traded here in this area. So the likelihood of it trying to test that, right? You've probably heard the term double tops and double bottoms. Trying to test that is much stronger than if it continues to go higher and higher and you're entering here, as an example, into uncharted territory. So if you're ever looking at what are the best trades, let me offer some advice. The best trades are not the ones that break out. Okay? You know when you see a breakout that's really strong and you have 2 really strong candles, those, in my opinion, are trouble. All right? Because how do you know that at this point the party's over or there's anyone left to continue buying? You really don't know, right? The market has moved very fast in a short amount of time. Just watch out and be very cautious. So I prefer, for a breakout type scenario, I prefer to have a situation that looks more like this, where the candle breaks out of whatever scenario you're looking at and then retraces. And the reason why I prefer this type of a scenario is because I already know that markets love to trade where they have already been. So I know that the market has traded to this value, let's say 1780 or 1778.50. So the likelihood of the market going up here and testing that is much better, much better, as opposed to you entering after a big move and as you know, when you have these large candles, all the indicators are probably telling you, yeah, go long, momentum, MACD, moving averages, because it realizes that it's now moving in a direction up or down. I'm not saying that the market won't continue in that direction, but what I'm saying is that if you're entering here, it may not, at least for right now, have any push to continue it further up. It may need to come down, maybe start to channel or range before coming up. And that's why I prefer this. I prefer a situation where it breaks out of wherever it's trading, happens to trade, and then retraces back a little bit for me then to go long to test where it's already been. Let's see some questions here. The answer is yes. So if you have an ATR, excuse me, that is 3 points, which is fairly high on the E-mini for what we've seen recently. So you have an ATR of 3 points, and the market starts to get tighter and smaller and drops to, let's say, 2.5, and you're still in this trade. I would definitely move that stop to 2.5 points or 2.75 points to be in line with the current ATR conditions. Now, on the other half, Dave, if the ATR gets larger, so let's say that the ATR and the current conditions show you something along the lines of here 3 points, right? So when that occurs and the ATR may get higher, let's say it goes to 3.25 and then 3.5, I want you to keep the same target of 3 points. I don't want you to increase the ATR value. And the reason is because the market could be trading against you. So even though the very next couple of bars may get larger, increasing the ATR, it doesn't necessarily mean that it's increasing in your favor. If this ATR gets larger, leave it at the same of where you started the move. If it gets tighter and begins to channel, and you realize that by looking at the current conditions, then drop your target, definitely. Frank, you really can't trail a stop with one contract. It has to be with two. So I recommend using two, not one. Because as soon as it makes 1 times your target, 1 times the profit target, you can use the second one to continue the move but not lose any money out of it. So if you are going to trail a stop, use it with one. We use it with multiple contracts. Prina, if you have a question, you can go ahead and type it away. Okay, go ahead. Anytime you want, just type it away. I'm looking at the chats here. Okay, Prina. What time does the Atlas line begin to draw? It's different for different markets. So if you wanted to trade, for example, the European session here, this is for the London Open. I have to set it to my time zone, so this would be the European session for the E-mini S&P. Or if you wanted to look at currencies, nothing changes. This is the European session for currencies. So you can add the Atlas line to the European session or to the US session. I wouldn't say the Asian session is really that great for right now, but the European session and the Asian session. Okay, so what you're looking at here is trading the currency, the euro currency, when the London market opens. Okay. Good question. Larry says here, so a good example would be, well, how do you know when to go back long now in the market? That is timing, my friend. That is all about looking at a perfect example of a pullback or strength happening in the market or some method, whatever it may be, Larry, to tell you, okay, now we're heading back up or now we're heading back down. And I know the market has already traded up until this point. This big news candle here is throwing everybody off. And so in order to go long or in order to go short, you have to have a direct method to get you long but you know that it's going to most likely want to test this where it's already been, Larry? Good question. The Atlas line Prina is good for the NinjaTrader charting platform, what you see here, for TradeStation and for eSignal. For the Indian markets, I haven't tested it on the Indian markets, but you would have to use another platform. Yeah, the trades that I like to take are based off the ATR, and typically under 5 to 6 points because it's day trading, Thomas. It won't work with Sierra charts. I think the closest would be TradeStation. Yes, you can. You can have it in as many charts as you want at the same time, Larry. For that question, it's not necessarily that the first trade of the outline is more accurate. It's not so much that. I like to look at the first trades of the outline because, you've probably seen this already, that the markets are most volatile during the first 2.5 hours of any market, right? So the first 2.5 hours of any market are the most volatile. So it's not necessarily that I like the first trades of the Atlas line because they're the first trades. It's because it's the beginning of the session, the beginning of the trading session. So look at this here, for example, and I can see it. You see here how this news obviously is you know, kind of an issue, but you can see here that as the day progresses, the average true range doesn't get larger. It begins to die off. And so when you reach 12 o'clock, noon, 12 o'clock, you're going to see that there's going to be less and less activity. So really the reason why I like to trade the first moves that occur in the Atlas line, or really any method, not just the Atlas line, it's because there's more volatility there to take advantage of. As we go further into the day, there's a lot of slow activity, channeling, whipsawing, and I don't like that. That's the reason, Frank. Timing techniques, every method is different, right? So if you're looking at scalping, it's a very specific way to get into the market, scalping. If you're looking at something like the power price action, it teaches how to work through breakouts and on any time frame. That teaches timing. It's a DVD course. But really, if you want to put it all together, Thomas, I would say go with the group mentorship. You know, it's a one package, all-inclusive type of program, which is 8 weeks in length, and it includes everything. And it's a great value. So that's what I would recommend. All right, let's take a look at a few other markets. Is there any markets in particular that anyone wants to see? Somebody mentioned crude oil. I have to add it, but I can show you the crude oil as well. If you give me just a moment. And just so you know, I have many videos that teach the January effect, that teach the ABC method, that teach how to trade the news. And so before I go here to other markets, I want to show you something about news here. Everybody sees this candle here on the euro? Now, I'm looking at this in different eyes than how most traders are looking at it, okay? Everybody sees this green candle and says the market's going to go up. And it may go up. And if it does, great. Whoever's long makes some money, excellent. But there's also a different story here, that if this candle here, which has invested many long traders, because let's face it, the only reason why this candle is green and is chaotic the way it looks is because there was a number put out by some report or some news that everybody bought because of that news. There's no other reason. There's no analysis. It's just, oh, the number was positive, let's buy it. So I know that for a fact there are thousands of traders that are now stuck in a long position. So now the question comes to mind, what if, just what if, all of these traders that are long get stuck and the market doesn't go higher, right? Nobody got in at the low of this move. If they're using stop orders or brackets to get in, this most likely jumped and they're long as of here. It's happened to all of us, right? So if this market does not move higher, there's only one option that's left, right? Realistically, there's only one option that's left. As soon as this begins to go lower, you're going to see a rush of traders to bail. They're all going to sell, and they may even reverse. So really what this is setting up to be a scenario, right? The bigger picture here is if these traders that are long are unable to take a profit and the market goes against them, and we're not talking a few hundred, we're talking a few thousand, you're going to see a huge move in the opposite direction. And unfortunately, that's what I'm looking for. I'm taking advantage of that. Okay? So for example, let's take a look at on the E-mini, how you would handle that. This candle right here on the E-mini, let me just remove some of the things here from the chart. This candle on the E-mini is based off the news that occurred at 8:30. At any time throughout the day, if the traders that are all short, because again, remember, the only reason why this candle on the E-mini at 8:35 in the morning, this morning, Eastern Standard Time, is red is because there was a news event. The news was most likely negative, I'm assuming, and everybody just sold. But if they're still holding this short and the market begins to go against them, you're going to have all of these traders trying to cover their short position, and you're going to have a mad rush long. And that's where I jump in. I'm going to jump in where everybody is getting stopped out of necessity. This is a move out of necessity, really, right? If you're short and it's not going in your direction, you have only one choice. And since I know that there's thousands of traders here stuck, even better. So now, where do I get in? Well, look at the highest high here of this chaotic bar. When I see two consecutive closes above this highest high, I'm long. Now, if this candle was green, it'd be the opposite. I'd look for, since there was a chaotic move to the upside, I'd look for this to collapse. Anytime throughout the day is an opportunity to go short. And just like I mentioned earlier, the best trades are not the ones that come out really strong. Say two consecutive bars that are really, really strong. This is not the best move. The best move is one that comes out and then retraces a little bit. Again, the reason being, I know that the market traded here and it's going to want to test that, maybe even try to break it, but I'm not going into uncharted territory. So the closer that you are to getting short, if this was a green bar here, or more importantly, anytime throughout the day, look for this and this. Go long closer to the top of that and take it up, as opposed to going long into uncharted territory. Does that make sense to everybody? I think trading doesn't really have to be complicated. It just has to be more common sense than complicated, if that makes sense. So let me take a look. Let me add some instruments here. Somebody mentioned the DAX and the crude oil. So let me add a few markets here to take a look. The DAX is a good market, but the Euro Stoxx 50, which trades similar to the DAX, I think is a little bit more conservative for the person who asked for the DAX. Don't rule out the Euro Stoxx 50 as well. All right, so let's take a look here. Let's take a look at the crude oil. And let me add the Atlas line here to this. the oil to go short at 98.23. That's the crude oil. I forgot who asked for the crude oil, but that's the crude oil. You can use either, Dave. You can do both if you want. You can take 1 times the ATR and be done with the trade. You can trail a stop. You can look for prior support and resistance. So however comfortable you are, personally, take the profit and run. That's what I do. I like to take the target and run. If you want to trail it, that'd be the next best option. Okay, who asked for the crude oil? I forgot here. There's a lot of people in the room. I forgot. Somebody asked for the crude. Was it Dave? Okay, so here's the crude oil chart. To go short, FDAX, right? DAX short, 92.8850. The reason, again, 1, 2 consecutive bars that close below the Atlas line. This is the Atlas line. Also, if you notice, remember I said to you that markets love to test where they've already been. I'm seeing it because I notice these relationships all the time on the chart. Do you see how this candle went down? It's a pretty strong candle. And the next one went up. It's almost the same thing. It wants to test where it's already been. So if you're ever looking for, and you're waiting just a moment for the better of the move, look for it to come out and then retrace, and you can get in at a better price and take it down from there. That's just something I notice. Timing is everything. All right, any other markets you guys want to look at, or any other questions? Somebody, NASDAQ and Q. Let's see what the NASDAQ looks like. Okay, let's take a look here. NASDAQ. Similar to the E-mini S&P, there was a long here at 1, 2, 35.15. As soon as it started to trade, actually here, 35.15, right, this candle here was the long of the NASDAQ, right there. Remember, time-based stop, prove-it stop, catastrophic stop. This trade doesn't make the target that you want. This is the entry here. Here is the ATR. You want to be in, out, and done with the trade. All right. I want everyone to have a good weekend. I have, again, a new group class starting February 11th, which includes the Atlas line, includes the trade scalper, the blueprint, the roadmap, the X5 trade, the ATO, the at the open method, and includes all of the methods and software in one complete package for 8 weeks. Feel free to email me if you have any questions. NASDAQ yesterday. This is the NASDAQ yesterday. And here is the NASDAQ the day before that. And here's the NASDAQ the day before that. Okay, so you can see multiple days of the Atlas line. All right, everyone, stay safe. I'll talk to you soon. And I'll put this video on the blog and on YouTube within the next few hours. Take care, everyone. Bye-bye now.